Why is it that
Hi,
you remain negative on Indian banks?
Yeah, well, I mean, we have been, the Indian banking sector has been on a negative outlook for several years, and the reason why that has been so is because if you see sector outlook is a slightly more short-term view of the sector. So what we are essentially saying is our take on the sector over the next 12 months. And if you see the next 12 months, we think that there are several challenges that the Indian banks will continue to face amid the macro headwinds that have sort of been plaguing the sector, in addition to some of the concerns that were already prevalent. But on balance, I think it's still by and large a capital problem. Around the same time last year, we were perhaps a little less negative following the government's announcement of the recapitalization package. But I think since then, now we're pretty much, the sector is back to square one, given the kind of losses that the sector witnessed, which pretty much eroded the entire recap that was done in March 2018. So I think it's still by and large a capitalization problem. And given that we're not going to see much respite on the earnings front, I think unless and until the capital hole is plugged, we don't believe that recovery for the Indian banking system is going to be a fast-paced one.
The negative call is restricted to the state-owned banks, then I'm guessing, right?
Well, there's certainly the ones which are driving the sector outlook, because the problem still largely lies there. And yes, while private sector banks have been a bit in the eye of the storm themselves, but I think the levers of recovery are still largely in place. And as we have seen in the last 2 quarters, I think the large ones certainly have started displaying some amount of bounce back, which we expect to continue.
But you're saying that the region is looking stable, when you're comparing Indian banks to the region banks. For Asia Pacific, you largely see that the financial system is stable right now.
Well, I think if you compare ours to the region, I mean, Indian problem is by and large a homegrown problem vis-a-vis the regional countries which have still a relatively higher exposure to global macro headwinds. And I think if you see the broad messaging, we clearly see some of those headwinds to be negative for certain banking sectors. So in that sense, compared to last year, the narrative has become slightly more cautious from a regional perspective. But talking of Indian banks, I think while we do see, internally we think that there is some degree of optimism, because we expect credit costs to come down and those kind of things. But really, I think buffers with state-owned banks is just not there, and therefore whatever the improvement we expect, I think it will still continue to be a fairly significant overhang for the sector as a whole.
Where does your conviction, representing Fitch, come in for Chinese banks? There's been much overhang over there. Their corporate debt to GDP is 160%. And not just that, there's been much documented with regards to the shadow banking menace. You still see that as stable?
Well, it's interesting you bring up Chinese banks, because if you look at the difference between our standalone bank ratings, Chinese bank ratings vis-a-vis the sovereign, I believe is in the single A range, whereas many of the large Chinese banks that I am aware of are in the double B range. So there is a multiple notch differential between where the sovereign is vis-a-vis the standalone ratings of banks, which in a way displays that we are not rating them as high as the sovereign, clearly because there are risks in the system.
Okay, Saswat would have loved to